Alright, we are back to finish this up with the final trades. So, in last video, finished off with this near trade, hit take profit to perfection, but unfortunately I got stopped by spread on this narrow retest, and I was like saying how if I'm live, New York session watching price come close to my stop loss, I can just remove the stop loss and watch it to manually close when it's a very high probability development. So yeah, there's that. Next trade that was Polygon. I almost thought this was the model. It's pretty clean too. So recently took this trade on Polygon. Overall context here is that we are in this accumulative range where we swept the range low there, and one, two, swept the range low there. And price has gotten a extended move away. 3 structured pulls with a bit more of an aggressive push right here. So we're sweeping some liquidity, tapping into this supply right here. So it's a decent location. Yeah, there's a lot more higher time frame liquidity above that. So, it's a decent location to put in a high that can then rotate down for that third tap. So we can trade this as TCT, creating TCT in a semi-pro, but I like to call it semi-pro minus, where it's semi-pro, but you are having aggressive moves, and you did just come out of a key location. So it's like semi-pro, but it's on the worser side of semi-pro. So we want to have a clean model, no room for error here, which is what we got. So one, two, and three. Beautiful deviation to tap 1 there. We can see it nicely just came down and hit take profit. Let's see the entry was right here. You can see we have this demand creation on that push up. And we got the 5-minute break structure right here, with the next candle opening and then just dumping it directly from that candle. So you have to enter exactly on the break or the retest, or you are a bit more cooked. So yeah, 6.6 right there. Pretty clean technicals here. We had the extreme liquidity. We had the clean immediate aggressive break of structure, deviating tap 1. Nice, time frame for that break of structure as well. If you go on the 5-minute, you can see that there's no demand here. That's left intact. If you go on like the 1 minute though, there is a demand zone. But you can see it disappears on the time frame of the break, which makes it a bit more insignificant, but we can still put it there and see. And you can see you got this aggressive close, is closing directly into it, kind of disregarding it. So that can still be an entry there due to the two things of the clean aggressive break, no room for error in the third tap POI. Which we had some sort of a supply right here with also overlapping supply that I think came perfectly into it. This is mitigated, so we'll just leave it for now. This is also mitigated by the extreme liquidity. Oh, and this actually got taken. So we had somewhat of a block right here that it took the liquidity of. It was also mitigated, so it makes sense. You tapped into this inefficiency right above it. Anyways, had a little distribution model in that tab right there, in that second tab. You can see the overall volume area here. A bit low in the range, but you can see that it's a clean volume area with nice ranging environment. And we got that bounce off of the volume area high. Stream supply retest, which is nice to see, you know, that you created supply on the break. This can also give conviction that you're not going to get a fake break, because even if this demand provided a little bounce, you have that supply there that you can reject off of. Which then we also had this demand backed by volume area low or volume area high, which can make it a bit sketchier to enter. As you can see, it is mitigated on a lower time frame, and there's no other room for error in the model, and you have that supply creation on the break. So I think, let's see, not really perfectly relating to a session. This is also super nice in terms of session timing. Exactly 1 hour into that New York session, or a little over 1 hour into that New York session, a little over 1 hour into that New York session, you can see New York open, pushed up into the third tab POI, and then 1 hour in, exactly 1 hour, like almost exactly 1 hour in, you put in that high, and then you reverse it. So right as New York manipulation is over, we got that confirmation, which is perfect. That can give, you know, good conviction in the model. Everything else was cleaned by the model except for the volume area high backed demand right there. But no room for error in the third tab POI, so overall pretty clean. Let's check where Bitcoin was at the time of entry here. Just to see what kind of confluence we were working with. Yeah, this is when Bitcoin was so we had some sort of a distributive range, but we started to kind of leave that range, maybe for a TCT and TCT within the second tap. And then locally within this range, we were compressing around that range high. And Polygon just confirmed in that neutral, locally neutral environment here. Higher time frame bearish though. You know, within that, after deviating that high, in that semi-pro environment, definitely semi-pro, because we had the failed distribution, deviated high, swept the high again, swept the high again, and you're kind of, you know, still near that high that you had swept. So the semi-pro environment, although locally it is neutral with the compression. And it's interesting to see as Bitcoin here did nothing, we go over to Polygon. Bitcoin is doing nothing, Polygon was coming to the technical target. So it also showed that, like, in those neutral environments, you know, the selling pressure is high enough on the pair, you know, which can be assumed by the distribution. Then you can just come to the technical target. And you can see this volume area high back supply just act as a it just acted as a place to bounce and come into the extreme supply. So, you know, if you were worried about it, you did get your re-entry down here. You could have played, you know, something like this. That extreme mitigation that took the extreme supply here. So you could play that something like this for, it's a bit lower RR, but still decent. Okay. Okay, so that's the trade on Polygon. Interesting to see. If you left a run on this one, you would have gotten wicked out today during FOMC. Quite weird price action. You had this accumulation, 1, 2, 3, pushed up here. After you hit the technical target of it, to be known, you came down, you swept the Wyckoff point. You swept that tap too, then you pushed up, took out the main high, reversed all the way back down, took out the main low, and now you're getting it by. It's like, what the fuck is going on with this pair? That's what happens when you trade these low volume pairs. You can see weird shit like that happen. That's unexplainable. So why we look for very clear confirmations. Okay, this was about a 3-day model as well to note. But yeah, and then next trade I took was on Tau. It was a model in discount, and this one ended up failing. Which this was one that I kind of later decided that it wasn't a worthy entry. I only entered it with 0.5. But yeah. So you can see we've had a fairly extended move down, and then we formed this range right here. Boom, and then within this range, in the discount section of this range, so this is around like kind of like a I would call this semi-counter context, because we're in the discount of a range after a fairly extended move down. In the discount section of the range, it's also kind of like neutral, because you're kind of also around the EQ of just a ranging environment. So maybe you'll get this distribution here, and it could come down and sweep this low for an accumulation, although we wouldn't necessarily expect the market to accumulate with the location Bitcoin's in. But just given the individual chart, that is something that you could pre-plan. Okay. So the trade I took was this, and this. Something like this as you return to zone. Pretty clean overall. A pretty, a lot of lows building. That's what I'm trying to say. 1, 2, 3, 4, 5, 6, 7, 8, 9 up here. So with 9 lows building, we got the clean break. After coming into this extreme supply POI, came a bit deep into the POI, deeper than I would have liked. This is one of those models that you really just need to see immediate follow through. If it starts spending too much time around here, it's likely going to come back up for the main high, just because it came so deep on this tap. So that's what we're anticipating on, was that immediate follow through. And locally here, Bitcoin was in this neutral ranging environment where we could potentially expect a move up for the first move fake move. We could either expect the first move fake move up for the reversal down, or we could expect the first move fake move down before coming up. So in those two scenarios, we'll either come down locally here and maybe complete, you're anticipating on the model being completed on Tau within that move down before it reverses back up, or you come up, likely invalidating the model on Tau because that would indicate more moves up, more ranging around here. Even if it stays neutral and just ranges around here, that doesn't look good, because now you're building this liquidity here, and it's going to very easily just come back up for this high, because you have such a steep tap 2 that came so deep. It starts to look better for a new range at that point. So yeah, I kind of decided that also with the entry being in after hours, all the factors there, it wasn't a trade worth taking. It was not a extremely high quality trade. I did make the right decision of taking it with a 0.5 risk. In the future, what I would have done is just stay patient, waiting for higher quality confirmations in line with Bitcoin. Because yeah, it's the context, and this is not it. So not the best, not the worst, but not the best. And then the overall model wasn't perfect. So yeah. But I mean, the overall the model just as an individual model isn't horrible. You do just have to anticipate on a flush, and then maybe draw more realistic. You want to anticipate on something like this. Maybe you get something like this, and then you can see this. Okay, that's an extremely clean model. You'll just look back at this like, damn, that was a no-brainer. Like, boom, boom. Like it looks clean after it's played out. But if you start ranging up in here, then it's not really looking that good. So it's kind of just based on experience. I can just look at this and be like, it has to get that follow through from there, or it's not looking good anymore, and it can easily fail. And on those, you want to see Bitcoin having some confluence. If you're expecting that, if you need to see that immediate follow through, you want Bitcoin to have some confluence to give confluence to the idea of having that immediate follow through, which is a bearish move in the overall crypto market. And we can look how this ended up playing out. Price just expanded higher. Price wanted to come up. I'm not sure. This was kind of like a compression. So maybe kind of have this compression. And it looks like you're getting that first move, fake move. So maybe this wants to be a first move, fake move before going lower. A true first move, fake move. That's actually, because we were already kind of looking at this as a compression, but you can see we got like somewhat of a first move, fake move, but maybe we just want a deeper one. Very similar to that Doge trade we discussed. And then also, this is just a clean potential range to come up and then do something like this, which, this would be also semi-counter, but I would call this semi-counter plus due to the one aggressive move we have down here. Boom, aggressive move, so we can expect lower high for the lower low to continue this aggressive downtrend. Because if you're having an extremely aggressive downtrend, you're likely, if you've only had 2 pulls and you're in a very aggressive downtrend, you're likely to have at least 3 or 4 pulls before expecting somewhat of a deeper reversal. Although that those other pulls can take place higher up. Not that high, but like they can take place, up here, for example. So it's still semi-counter, but semi-counter plus is how I like to label that. So yeah, we're just going to see how this ends up playing out. We're also in a pro environment on Bitcoin now, so we can get aggressive flushes at any time. So yeah, just looking for distributions is not a bad idea. Okay, moving on to Doge. Took another trade on Doge at the same time as this one on Tau. And this was actually a distribution to accumulation play. I'll just delete everything. We know we're in that compression. Maybe I'll show that actually, because I talked about that in the last video. Overall, Doge is in a compression, as we can see. This was the previous trade we looked at on Doge. Deleting that to now discuss USD CHF. Wait and double check what's going on with this. Okay. That's the pre-planning. Honestly, it's looking decent coming into this pre-London. I do want to monitor this. We do have some demand here though. And currently some demand here. And we're coming a bit deep. So maybe if we can get something like this. Something like a little topping formation. Could look decent. We're gonna see. I got a little set of that main high, so we might need to redraw the range, which would not be bad because then we'd have this failed distribution prior to our range creation, which could be nice. Yeah, if we keep coming higher, I probably won't want to just trade a regular break. I mean, maybe a big one, but that's just going to be such a big stop loss. Is it really worth it? You know, it could be okay. But then you're also getting a break into demand. So maybe you get something like this, and then you just try and short that bounce right here. Could be something more like that. So those are kind of the scenarios I'll be looking for here. Okay, back to the topic of this video, Doge here. Took this trade on Doge. It was an accumulation right here into a distribution. And this one honestly kind of has been something I've been learning. I've just been taking a couple L's on and starting to realize, you know, a better way to play it. It's just a situation I need to be more careful in. Is you can see right here, we formed a range. We came up into the third tap POI for this distribution to accumulation. It was looking nice, building up nicely. Had the first move, fake move right here. Took the high of this demand, or the supply, bang. Although there is some liquidity, you know, high still resting above, which you can see it came for. And then locally here, I was looking for TCT and TCT to trade. Yeah, quite an aggressive return to zone. So I was looking for TCT and TCT, and I tried a short already on the second tap of this, which was already, you know, just kind of looking at the overall thing, starting to get a bit extended right here to the upside, you know, closing deep above. This was your extreme supply. Of course, if something like this would have happened, the overall model would have looked very clean, right? So, you know, kind of another one of those scenarios. Where we were looking for that TCT and TCT though, and I entered on the second tap, which that's just been something that, like, when you have a TCT and TCT model, yeah, you can see we barely got that close below on the 15, entered there, and then it just messed around range for a while before going higher. So yeah, I mean, I was just looking at this return to zone thinking, okay, I mean, there's nothing to cause price to bounce within here. And then there's also just straight return to zone all the way down here. So, you know, we're getting this aggressive looking pivot, sweeping the liquidity of this demand block. We could just flush from here. There's no guarantee that we're going to get a third tap POI. But, you know, just overall, we're trading a distribution to accumulation. We're entering in after hours. Bitcoin is still, you know, in that ranging environment that we were looking at, so we're not really expecting that aggressive flush just yet. I positioned myself with only a 0.5 risk on this, but you're not necessarily expecting that aggressive flush just yet because Bitcoin's kind of just in a chill environment still. It was right here. And that's just one thing I've been noticing is when you have TCT and TCT, you have a clear ranging environment. You have this clear ranging environment in your third tap POI. You don't want to force an entry on a second tap on a deviation of that range. Oftentimes I've seen that fail. You want to trade the TCT and TCT and only trade the second tap if there's no room for error in the overall model, in the overall idea, which, you know, in theory, it wasn't horrible, but the Bitcoin confluence just wasn't there. So that would be the main reason why this wouldn't classify as one of those times where you can trade a second tap. But yeah, just overall, it's just a bit riskier trading these second taps. I've taken a lot of trades like that end up failing, and maybe they came for like an aggressive third, something like that, where they put in a clear pivot. Although this was a decently aggressive breaker structure, good liquidity, good overall model, apart from the fact that it's also distribution to accumulation, which also does then introduce even more room for error with, you know, this potential range, which is the, you know, valid range to pull in the uptrend, with this potential range high, this range high right here, looming right above this pretty massive model, which is happening kind of in the discount section of this overall range. So, and you can see that high has now been swept. So kind of also showed how that context, this overall context, wasn't the best here to be forcing entries in the second tap. That already kind of, you know, we can see like we can see it's okay. Like, it's not the worst trade in the world, I'll be honest, but the distribution to accumulation in combination with Bitcoin not being at the right PY and it being just a second tap, in those situations I prefer to wait for the third tap. Is kind of what I've been starting to realize after taking many L's trying to trade at TCT and TCT on the first tap deviation. It's better just to wait for the third tap if it ever comes. Okay, so that was that Doge trade. And then we took a couple trades since the pivot has been put in. I'll do these ones a bit quicker. They haven't fully even played out yet. But I took some wins, which is nice. And I'm still in this active trade here on Ethereum. So I'm in a trade here on ETH from this pivot right here. This was the overall model. This is the overall model, so this is still active. Very aggressive break, so this was not my RR. This is my RR right here. So that's the trade I've taken on ETH. I'm just going to go through these a bit quicker since this video is getting longer. Popcat, man. So I actually passed a funded account with this Popcat trade here. So I'm no longer in it, but it is a banger of a trade, and it's looking like it's starting to get that follow through. So, you know, this plays out. It'll be nice to, you know, throw that result in my journal and, you know, how it would have played. I should have also taken this on my, I didn't think it through, honestly. Should have also taken this on my personal account to leave a runner instead of only on the prop, you know, because I was very close to passing the prop here, and I passed it before this even came to the technical target, but I entered on this model here. This was TCT and TCT if you didn't pick that up. So we have our 1, 2, 3, and then within that we have this TCT and TCT, and you can also look at this high right here as an extreme retest. Since it's a decent time frame, 1, 2, 3 here, you can look at this as the extreme retest of this, which I discussed on a Doge trade in the previous video, why that's nice, because that's confluence to the overall idea. You came up for this demand zone, swept the liquidity from this block, kind of also, I think I actually, you know, kind of viewed it, I like this more, honestly. I viewed it more as like you had this very clear buy to sell that got mitigated, and you came for that mitigation, also sweeping the liquidity of this block. So just kind of viewing it like that, I think it's a bit cleaner. And then as you can see, you got this push up into the third tap POI with, you know, some nice equal lows down here at the bottom, nothing but return to zone here all the way until this demand POI, and then you got this. So you could have just entered on this topping formation up here because you popped up creating that demand POI in the after hours. Then you got the breaker structure in Asia right as Asia opened, which is nice with this topping formation, you know, with the no room for error POI, all that, and Bitcoin in that pro context now. Because I think I discussed this earlier, but Bitcoin came up and swept this high once again. So you have a 1, 2, and a 3, and this was, I think, on this retest right here. Or maybe it was this retest. It might have been this one. I can look. That is April 27th. Yeah, so it was on that lower retest that we got this push up. And I personally entered I had my stop or my alert above this high because I saw this demand here. And at the demand at this high. And I saw this demand and I was like, okay, I want to see it hit the demand, sweep the high again, and get that breaker structure. But then I checked the chart and we were curling up nice and slow here, and I was like, you know, this already has a clean topping formation. There's not really any reason to come higher than that point right there. So if we start breaking clean structure here, I think it's worth a shot. We're already technically in a confirmed model, so there's no reason to come above this point, and now there's no reason to come above this point. So I think it's worth a shot, and we started seeing some aggressive moves down from there. And I entered actually on this 3-minute because I was a bit late to the idea when I came to the chart. So I entered on this break because I didn't want to rush the entry, since it wasn't something I had pre-planned was to enter on the, you know, this pullback. I was more looking to enter on something like this. So when I came to the chart and price had already broken this 1-minute structure, that would have been the ideal entry. When I'd already broken that 1-minute structure, I was like, okay, like this is a valid idea, but I don't want to just be reacting to the market, so I want to wait for some proper confirmation. So I waited for this higher time frame structure break. Still decent RR, especially since we can run this all the way down. To here. So that was like a 12 RR. So there's that PopCat trade, and then finally we had this Pangu trade, which I did take on the prop firm and the personal account. So we are still in this guy. We're just gonna hold it and see. De-risked it. So yeah, we're just gonna hold it and see what's up and where that wants to go. This is our model here. Bit of a lower time frame model, but you can see you had this super clean exhaustion prior to it. Was actually this. I'm drawing it fast, but not remembering how it went. I was like, that doesn't look right. So you had this nice distribution as exhaustion, a lot of liquidity building up below here. As you can see, you didn't have as much liquidity within the range itself. You had 1, 2, 3, 4, kind of like a little 5 right there. Yeah, so you had actually a fair amount of liquidity. It was a bit lower time frame, so sometimes, you know, you don't get as many primary liquidity points within the range, but you also had, you know, it was lower time frame, but you had all the liquidity and the exhaustion prior, which kind of, in a way, makes this lower time frame model even higher probability and into a higher time frame model, because it's part of this higher time frame top information where you keep deviating at these local highs. Like each of these is deviations. None of these is a market structure continuation. So yeah, and then we got this 3-minute breaker structure. Pretty simple. I was sweating a little bit, feeling a little bit fearful when I saw price close here. I entered instantly on that close, and then boom, next 2 candles just popped directly up. I'm like, damn, did I really get caught in a fake break? And I'm kind of like looking at this like, okay, maybe this is, you know, this is kind of like your demand zone, and then this now just is kind of mitigating the unmitigated part of this overall demand, and you have even more refined demand down here. And I was like, oh shit, did I just get caught in the fake break? But it's whatever, you know. I told myself, you know, we stick to the plan around here. So that's what happened, and Price came, hit the technical target, and we still got some room to run, and this is creating a crazy rounding over top. So either you want to keep deviating lows, and keep building more liquidity, and then eventually come back up and create a higher time frame range, which I would not be surprised, because this is very low time frame relative to the aggressive move up you've had here. So that's entirely possible. And I'll have to manage the position accordingly if we see something along those lines. Like keep deviating the lows. You can get some sort of something like this. And then you'll redraw your range. Blah, blah, blah. So yeah. Literally each lower high is coming for the extreme supply. Actually pretty crazy to see. This took the liquidity of that supply there. Some sort of a supply looking thing there. Supply, clear supply there. Clear extreme supply there. And now we have created, some sort of supply way up into here. Maybe even want to look at this entire thing. So, yeah, I mean, if you want to deviate the low and then come back up, like, this can easily just accumulate here. And create something larger, which I would not even be mad about, because I would be interested in trading it. Because, yeah, we've been seeing an extended move away from this low. We're coming into a nice region for rejection. Just, kind of sweeping this liquidity into this inefficiency. Nothing too crazy. This overall area, you can see just holds a lot of supply. So maybe you want to tap up, come up a bit higher. Who knows? But with Bitcoin being at a pivotal place, this can easily call this its final extreme mitigation. You keep getting these extreme mitigations, filling positions, and then boom, you get the pop down, and you create some higher time frame supply. Bang, and now you've gotten this move down. Now you kind of chill around for a while, maybe eventually get a retest into it before the continuation to the downside. Could always happen like this as well. So we're just going to have to see. With Bitcoin's location, this is definitely possible. So that's why we leave the runner and just take a de-risk TP at the technical target on the personal account. And prop firm, like I said, I passed that account with this trading combination with that Popcat trade. So unfortunately, I cannot leave runners on that account, but it's all good. Because, we got more stuff to watch for, like this APT model right here that just deviated the high and is now getting an aggressive reversal. This can be nice for the coming days, but this is very massive. So it might take some time. But yeah, that is it for this video. That is it. Wrapping up all of the trades I've been taking. Feels good to do this, man. Did not want to make, 2 hours of videos doing this, but we did it anyway, man. So now we're going to be more consistent with, just after taking trades, making the videos. It is kind of nice to make these videos a bit later after the trades have played out, so that you can see, your expectation versus how price actually ended up unfolding. It's always a good thing to go back in the charts and look at that and, journal it down, take note, blah, blah, blah. So yeah, making these videos a bit later can also be even more beneficial for that reason. But yeah, appreciate you guys for watching.